technology stocks drove a rally again in U.S. equities, as we saw the Dow Jones Industrial Average top 160 points, and the S&P 500 increased 0.6%, increasing the index of 20% since its October lows, thus signaling a bull market. Welcome, everyone, to Buy, Hold, Sell. I'm your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, who is in a hotel lobby right now in Los Angeles, California, about to give a keynote speech. I'm guessing at the bar or maybe in the ballroom, but who knows? We'll get to that later on. And we have a very special guest with us today, Janet Alvarez. She is host of the Daily Business Briefing on SiriusXM Radio, as well as chief of the Dallas Express News. Did I get that right, Dallas Express? I think so. So, Janet, thank you so much for joining us on Buy, Hold, Sell.
Thank you so much for having me. It's a pleasure.
Well, that's great. Well, I want to start with you.
Well, we haven't finished the show yet, Alex, but don't get too jiggy, all right?
There you go. There you go. Well, I want to start with you, Janet, because you have been speaking about this market for some time. You're right there. You're right in the middle of it. And all I know is that we see a bull market. Everybody is optimistic, but it wasn't meant to be this way. Are we going to see this rally continue for the rest of the quarter and beyond?
You know, there are a lot of people who seem to think that we're going to be breaking out now, that the limited breadth that we've been seeing in this market for some time is ending, and that we're going to see an increase in breadth, and that's probably going to lead to a breakout in this market. There's a lot of bullish sentiment now. The recession that people had been expecting hasn't really materialized. Jobs are still pretty healthy. The economy overall is still pretty strong. Corporate earnings haven't really been beaten down. So there's strong reason to believe that this is going to be a bullish environment for months to come.
Okay, well, I see that. Toby, what do you think? I mean, we were talking last week with Chris Rowe from True Market Insiders. Yeah. Both of you guys seem a bit on the pessimistic side. I mean, but right now, all I'm seeing is green on the screen.
Yeah, well, I think there's significant historical context here. And I'm not one of the ones who really got too jiggy about breadth, because every freaking bull market lacks breadth. I mean, if you go back and look at almost everyone, particularly in its, sort of the beginning stage, it's always 8 to 10 stocks. It was Cisco. It was, MicroStrategy in 1990, 98. It was Dell. And then, we got into Apple coming out in 2007 in June. And then it was Apple. And it was Apple suppliers, Qualcomm, and blah, blah. This is not unique. I think the strange part, and one thing I've been looking at is the Russell 2000, right? The small guys. There's so many mixed messages, obviously. We've never been here before, Janet, I would say, that in terms of post-pandemic, post-European war invasion, post-China, China, United States, now basically in the next Cold War. So there's a lot of mitigating macro stuff, but then in the micro, the jobs numbers today were bad. So bad was good today. I just don't know what week is good or is bad. And that to me just speaks of the confusion. And as a money manager and a, wealth manager, it's like, dude, just buy the freaking 12 stocks and don't, worry your pretty little head about it, because that's really, at the end of the day, if they don't own them, they trail and they take the money away.
Here's the thing. Go ahead, Janet. Go ahead.
No, I was just going to say that the ambiguity is absolutely right. And there have been two camps. There are the people who think the Fed has already done enough. Money supply is constricting. We're going to see a rapid deceleration. And a recession is surely to come. Yeah. And there are those who believe the Fed hasn't done enough, that this economy, this market has been quite resilient. The consumer's still resilient. The Fed still has more of a job to do. And look, the global macro picture does raise eyebrows, right? The big headline today was that Europe is now officially in a recession. They're actually
China's in a recession. EU's in a recession.
But
Russia, I don't even know what recession is in Russia. I mean, if they gained 20%, they'd still be in a depression.
Yeah, but it means we're the safe haven, right? So if European stocks look weak,
yes.
If people don't want to invest in China right now, that means that we're the least smelly, dirty sock in the bin.
I've never heard it put quite that way. Yeah,
I like it.
I like that. I may steal it.
Toby, here's the thing though. You talk about these small cap stocks. Russell 2000's up to 7.5% in the month of June. And then you talk about these 7 or 8 stocks that are actually pushing the market higher, melting up, so to speak. Does it matter though? I mean, does it really matter? I mean, this is the 21st century. We are really the nucleus of everything is technology and the evolution of technology. So does it really matter? There's only a handful of stocks that's pushing this market higher.
I don't think it does. I mean, I think a lot of people are really concerned about it, but I think
that was sort of my point. You may have said it nicer.
Yeah, I think if we have an AI-led boom, for example, I think that's as good as any other type of boom. Listen, there have been specific industries and sectors that have driven bullish markets in the past and that have propelled the economy in the past. And so if we're tech propelled right now, I don't think that's a bad thing. I think it's perfectly logical and reasonable given where we are in this cycle, given where we are in terms of just scientific and technological development.
Now, Todd, since I just sold a book to Random House called the AI Investors Playbook for 2023 to 2030.
Very nice.
I've been sort of deep in the weeds in this. What's interesting is, again, when you get the herd mentality, I mean, when I was a money manager guy, the chief of strategy or whatever would call us in and say, excuse me, Janet, for these words, get me the fuck in those freaking net stocks. I don't care what it is. You've got to get in there because we don't have enough, and people are going to pull money out if we don't have a lot of Cisco and Dell and BlackBerry and so on and so forth. And I understand that mentality, and to a degree, that's where we're at. And also, you notice that the Nasdaq was down today, so you can't go up 190% in 3 months without having people want to take profits, like me, and. So we took a lot of profits on it on video over last night. Not after Cathie Wood. I don't do anything that Cathie Wood does, but she was very famous to be behind it, and she was very famous to be the first one to sell it. I mean, just portfolio management says if one position is up 190% and it went from 3% of our portfolio to 7% of our portfolio, I'm in the business of not having people lose money, so we did take some profits there. But I agree. I agree, Janet, that this age of AI, it was interesting today. Sam Altman, the founder of OpenAI, came out and said, this ChatGPT thing that we created, I'm worried as hell about it. Well, that was, that actually hit AI stocks today, since the poster child of AI said he thinks that ChatGPT is out of control. I'd counter with the fact that it's not artificial intelligence. It's machine learning. It's algorithmic machine learning. That's what ChatGPT is. So the AI is not really hit yet.
I think the big stumbling block that AI could face is regulatory pressure, right? Because I think there's a lot of questions around intellectual property. And if you generate an idea or if you generate a product using AI, whose property is it? And to what degree do you have ownership over it? And then there are a lot of ethical concerns and questions that will raise regulatory concerns too. And that's right now in the shadow of the mini banking crisis that we've had, of the SEC's big regulatory actions against Coinbase and Binance. And so I think the big questions are the legislative and regulatory actions that are come for AI. What do they mean? What sort of guardrails and parameters are going to be put on that industry? That's where I think investors need to take a little bit of a closer look, just to be prepared for that.
Well, Janet, you make a great point. I mean, in the Netherlands today, they came out with their DAL regulation and said, based on our regulation, I can't do a Dutch accent, Todd. I tried, but I just can't do it. That the scraping, which I call stealing, is of copyrighted is illegal. Now, I happen to be an investor, and I did a long interview with a company called Versus AI that is a public company that yesterday and today announced their patented, not HTML, but they have a thing called HSML that allows, in Europe, you have to be able to audit on a website where the hell your stuff came from. And the fines are $5 to $15 million if you're taking copyrighted material. Well, these guys have taken billions and billions of bits of copyrighted material. So there are going to be these guardrails, and Versus is the one company out there in the world right now that has a solution. And the EU just paid them $5 million to test their solution on just a very limited test. But we've all heard of HTML and TCP/IP during the net days. Look for the word HSML. This is spatial content that allows you to overlay HTML, and it shows where it came from and the authenticity of it. Because you're exactly right, Janet. You could kill the baby, quick if you start throwing out. And remember, in Europe, that's the land of the cookie, for God's sakes. It's the GDPR, guidelines. They are very, very cognizant. Maybe because they've been around a lot longer than us, and they had artists back in the 13th century. I don't know, but they get jiggy with it, and you're going to have these guardrails, and then people are going to have to learn that ChatGPT is just like Siri, except it's a giant spreadsheet in the sky in the middle of the cloud, and it's dumb as hell. It doesn't know a goddamn thing, but it knows how to use logarithms and machine learning to put together. Remember the NVIDIA chip, the 3000 does $30 trillion calculations per second. That is what is unleashed AI. Because we've had AIs around older than me, Todd, if you can believe it. But there was a
Civil War era.
40, 50 years ago. I mean, we've been using algorithms since like the 12th century, This stuff is not new, but it was just the lack of speed. So
and the language learning too, these language neural networks, is that the more people use them, the better they become, right? The more
no question.
we give them, the more we correct them, the better they become. They become a reflection of ourselves, so to speak, of our service, of our queries.
Right.
Well, it is sort of how the brain works. You're a child and you don't know squat, and then you get punished a few times. Okay, don't do that, and then you learn a couple other words to get you a cookie, so you do more of that.
Yeah.
So neural networks are absolutely a learning system, but they haven't made the leap to actually not being sentient, but to know you so well that they make suggestions and they improve the stuff you're doing. That's sort of the next block to come here. And there's no question. I mean, Janet, the other thing I would say, I write about this a lot. What most human beings do not understand is you have to have 2.1 births for every death per year to replace the generation before it. And I, as a boomer, and you as a zoomer, I'm going to guess,
Flattery gets you everywhere.
I wasn't born yesterday. Okay. So we have in Italy and France, but Italy and Japan and so on and so forth, there is no way they're going to only have about 60% of their population by 2035. That's just the math.
There's a big debate in our country about immigration, and really this is a debate in many countries about immigration. But one thing is absolutely true, is that immigration, in terms of net population replacement, in terms of replenishing our workforce, has been a good thing from an economic perspective for the United States.
For years, yeah.
And arguably that's what Italy and Japan and these sorts of countries need more of, is some sort of worker program to allow workers to do the jobs that they may not have enough people in their own country to do.
Well, no question. But also, bear in mind, productivity enhancement has been going on for a long time. I told this story about Genghis Khan when I was in Mongolia, and I didn't really know much about that history. And I'll be damned. How did they wind up taking over 7/8 of the world? Well, somebody invented this saddle that didn't move, so you could shoot arrows from it while the other armies were running up and getting arrows tossed into them. And you're on a moving horse. And they just cleaned up. They took over Vietnam, for crying out loud. I mean, they were down in Poland. I mean, it was, but what happened? Number one, they actually invented a mailing system. Number two, you actually had exports and imports. The economies grew fantastically. They also, by mixing all these various groups of people, made it okay to tolerate someone of a different religion, which was only, the cause of the first 14 centuries of wars, right? So, I mean, we need this progression. I would just say, Janet, on the immigration, the countries that are we're having immigration problems. What they're not exporting, though, are their white collar workers, are their knowledge workers. knowledge workers are now becoming, more valuable because now they're going to be able to do more. And then Todd, my favorite thing is in the UK, I read the Mail every day. I love the trashiest stuff that you ever seen, right? And they talked about overworking, the idea that people are working in these really dull, insurance adjusting, blah blah blah. They're using ChatGPT, they're using neural network, and they're getting their job done 50% faster. So then they're taking side gigs for the other 4 hours of the day, and they're making twice as much money. And that's humanity, baby. That's all I'm saying.
Okay. Well, that's great. That's great. And it's definitely a topic that we will continue to discuss for future shows, because it's not going away anytime soon. So that's for sure. So listen, so that's going to stick with it. We're going to stick with that with this block. We're going to come back after the break, though. I really want to get both of your thoughts on the upcoming inflation data and then the big Fed meeting. Is that going to move the needle for the markets, whether up or down? We definitely need to talk about it. So today on Buy Hold Sell, we have Tobin Smith and Janet Alvarez. She is the host of the Business Briefing on SiriusXM. And we're going to be right back with both of them right after the break. Stay with us.
I mean, it's time about today when I'm going to go topics.
Roll it down.
I am.
You don't need a car to listen to SiriusXM. You can listen anywhere. You know that, right?
What? Kevin Hart's Laugh Out Loud Radio.
Kevin, you could use your phone.
What?
Alexa, play Kevin Hart's Laugh Out Loud Radio on SiriusXM.
What?
This is how I know you're getting old. I guess that was it.
What?
Financial news TV, just the way you like it. Fast-paced, unadulterated, in-your-face, rock and roll style. Join us next time on Buy, Hold, Sell Live.
Oh, yeah, I'm going to remember all that. I can't even remember. Oh, God. Yeah, well, that doesn't. I want you to, oh, my God. Fast pace, no. Oh, sorry.
Take one.
Fast paced, no holds barred, in your face, rock and roll style.
Woohoo!
Good sign.
Let's kick some ass.
Well, the bulls are back and running on Wall Street. Welcome back to Buy, Hold, Sell. We saw the S&P 500 up 0.6%, increasing the index up 20% since the October lows. Yes, ladies and gentlemen, we are back in a bull market. And here we are back again with Janet Alvarez. She is the host of the Business Briefing on SiriusXM, which can be found on channel 132. And she's also the chief of the Dallas Express. And we are here with her expertise, along with Tobin Smith, of course, who is out in sunny Los Angeles, California today. But Janet, I want to go back to you on this. We have a big week coming up next week. We have the inflation data that's coming out on Tuesday. You have a pivotal Fed meeting on Tuesday, and they'll conclude on Wednesday with their with what they're going to do with the interest rates. What do you think? Will we see a pause, or will we see another rate hike, especially off of the heels of that enormous jobs report we saw last week?
I think we're probably going to see a pause. And the reason I say that is because there's just too much conflicting data. And I think a lot of the news that we're getting indicates that there are, minor problems in the economy and also globally, right? So Europe is now officially in a recession. Today, we saw unemployment tick higher, jobless claims tick higher, much higher than we had expected. I think there's a general slight softening that should give them a pause. And remember, a lot of the indicators that they're looking at are lagging indicators. So I think that you have to give interest rate hikes 12 to 18 months to work through the economy. There's an argument to be made that the constricting money supply, that the pace of the increases that we've had thus far, they haven't worked through the economy fully yet, and that the Fed might be prudent to take a pause, a hawkish pause, one in which they indicate with the language that they're going to keep a very close eye on indicators and just wait and see.
Okay,
Yeah,
Toby?
Well, I mean, first off, there's this thing called leading indicator that for some reason nobody looked at, and they're negative for 10 months in a row. That's never happened without a recession. Number one. Number two, if you look at retail, I mean, when Dollar General gets scalped 20% because people can't afford to go in and buy the dollar, knickknack, that's telling you that the bottom 60% of Americans who live paycheck to paycheck, inflation, cost, et cetera, is hitting them. I mean, it's hitting them hard. the flip side of that is that, there's 62 counties in the United States that account for almost 70% of GDP. So it's where you live that makes a difference in the, at the margin, on the margin for this recession. But the big one is that the futures market is already put out, their vote, they're saying that it's a pause. And the Fed and my friends at the Fed are total gearhead nerds. And they're more about those futures is basically the direct line of what the market thinks. And they do not want to disappoint them. So I'm Alex's case. Janet, sorry, my eyes. I had to move my camera out here. Oh yeah, Janet. They're gonna pause. They're gonna be hawkish, but they're gonna have to come to grips with the fact that housing costs, shelter costs, wages, service costs are 58% of their CPE, and they're not. The housing costs aren't going to move till October. I mean, they can't mathematically because it's a year-over-year thing. So we're going to be in this four-handle inflation. And oh, by the way, the commodity prices are shown a recession around the world. When you see copper drop 35%, when you see cobalt, which you use in batteries, drop 40%, what is that saying? It's saying in the global economy, we're not going to get any help. We're not going to get any help from China. You look at these storage, we're nerds too. We count the storage containers going out of China, down 80%. I mean, this post-pandemic world is just reversed everything.
My opinion is that yes, they will pause, but it's a big mistake because the whole point of the rate hikes and the tightening was to lower inflation to that critical mark, and they're not even close to that. So you might see a trend there, but are you going to accelerate that trend, or are you just going to sit back and wait and see? And there seems to be more risk in pausing than actually hiking, at least 25 basis points. Now, of course, everybody that watches this is going to say, well, 25 basis points isn't going to do anything. But I call bullshit on that. I actually think it does do something because it's a signal to the market that, yes, the Fed is going to continue on its path to getting to that critical 2% mark. We just have not seen it.
Logical, it's all behavioral. And really, one of the critical insights that I've heard recently about inflation is that inflation is about consumer perception. If you perceive that things are expensive and becoming more expensive, your behavior reacts accordingly, and that drives.
That's Dollar General. That's all the big values. It's not only perception; it's a fact. I mean, when eggs were like 5 times what they were,
Hold on, Toby. Go, Janet.
Yeah.
Until you get inflation down to a level where people perceive that things are not expensive, that things are not getting increasingly more costly, then you're going to have inflationary pressures in the economy. Inflation is the inflation that people perceive.
Okay, that's fair. Yeah. Go ahead, Toby.
Well, we're going to see four handle. So that's the conundrum. We're going to see 4%. We're not going to see a 3 handle on inflation. Literally, it's not possible till November. So therefore, the Fed is not going to be cutting. And there was a huge amount, earlier in this year of people that had come to the conclusion that the first cuts were going to, remember, Janet, it was like October, November, we're going to start to see cuts. They were, I'd like to find whatever they're drinking. And, maybe they're on lithium. I don't know.
That said, there are always the long tail risks, right? If they do raise again and it continues to weaken the banking sector in some way, and we get a little other crisis going or something, there are always the long tail risks. If there's any acceleration in the recessionary pressures, it's within the realm of possibility. We could still see the cuts sometime this year. Highly unlikely in the current economic trajectory.
All right. Well, we have a bet, Janet. No cuts.
I agree with you. I just think that you don't know what the long tail risks are necessarily, and you could always get surprised.
Well, there's no chance. There's no chance the Fed is going to be cutting in 2023, maybe in 24. And I know that they're supposed to be agnostic and they're not politically under any type of a microscope, but there is an election coming up next year. So I would think that somebody in Washington would try to push that a little bit and see if they could get a rate cut here and there to help boost the economy. But listen, what I want to know though, let's talk about real quick, let's pivot to oil. We had the oil
Spit it
sector.
out,
I'm so
Todd.
sorry. I know, right? The oil sector we should have seen a pop in oil this week, especially with the news coming out of Saudi Arabia, and all we got was a collective yawn. And then today we actually had crude that was down almost as much as 3% off of news of some deal that the White House is making with Iran, but the White House is backpedaling on that one. But Janet, what do you think? I mean, here, hold on, I want to go to Janet on this one. Here we are, we're coming up on and you talk about trends and behavior of consumer. Here we are in the summer. I know that there's the big Canadian smoke that's going on right now, and a lot of people put their weekend travel plans on the back burner.
Yeah,
it's very bad. But the rest of the summer is still going to go on and people are traveling. Would you suggest that oil be one of those sectors that investors take a close look at?
I think oil is a hard one, right? I think OPEC still has outsized impact on global oil prices. And I don't see the consumer willing to have the appetite for higher prices at the pump either. So I don't know that's an industry you want to look at right now. Also, capital expenditure domestically by oil firms is pretty low just because the economics of shale aren't making sense right now. And so you're not seeing that CapEx, you're not seeing that trajectory for growth in that industry. And, the current administration did agree as part of the debt ceiling plan to allow for more drilling. But I don't know that that's really going to be enough to sort of galvanize any growth in the future anytime soon. So I don't see the theme of oil being a strong one this year.
Well, I know a lot of your I'm sure you have a lot of fans there, being the chief of the Dallas Express, and you probably have a lot of people there have associated with oil. So I figured I would turn to you on that one. But Toby, what do you think? I mean, is this a sector to concentrate on?
No, I mean at the current price, no.
What about Hurricane Toby?
No. We buy energy trusts and then we hedge them because some of these energy trusts are giving us, 21%, 24% yields. But look at Baker Hughes, look at shale drilling rigs. It's down 8 consecutive months. Saudi comes out and they're job boning the oil futures guys and saying, we will show you how we can kill you and knock you out. And they cut 1 million barrels, but nobody else in the did anything. You have Russian oil going to India and China at $60 a barrel. Why the hell would they want to buy $72 barrel oil, even though they have crappy oil? But we're right in that point. The world's in a recession. Oil prices don't go up in a recession. You can go back 60 years, 100 years. Oil prices go down in global recessions because demand at the margin, at their increment, is not there. So I was hopeful because I'm a Devon energy guy. We've owned it for years. But also the business model, as you know, Janet, has changed. We're no more drill baby. We're pay dividends, baby. And buy back stock. The only reason why we own Devon. But I don't see it going anywhere until we get out of the global recession. And the United States is in a recession. In the other counties, the 300 other counties, it's just that we have these super sectors that keep us alive because 24% of our economy is healthcare, 10% is logistics. I bet you didn't know that, Janet, when you came on this show.
You know what? I think that oil and gas is a vital national sector in terms of national security and economic independence. And so I would say that the moment it becomes economical, the capital expenditures should and will rise. Absolutely. And so it's not like oil and gas is dead in any way. I agree with you that in this recessionary environment, the economics just aren't there. But I think it's just vital to the U.S. economy that we do consider it an essential industry that should be protected, essential industry that should be buoyed.
No question.
Security interests matter.
Yeah, no question. I mean, actually, energy security is more important than national security, and in almost every country in the world now. We always had the USA protecting the world, and we had the largest Navy by a factor of 10 and so on and so forth, Pax Americana. Well, now it's Pax Oilicana. when you have enough oil, when you have enough natural gas, and then ultimately when you're going to have enough renewables. We have $2.5 trillion of money from Europe and the United States and Canada to support building renewables. It's going to be a slow build. It is security because remember, everybody thinks about oil like gasoline. You know, the biggest ingredient in pharmaceuticals is oil. I mean, it's and natural gas. I mean, you know, it's much more than just filling up your tank. And but just from a trading standpoint, if I was buying oil here, I would be buying a put option or something to hedge myself because it can go to 64 very quickly as these refineries. And remember, the refiners were making these stupid spreads for like 6 months after the, you know, I mean, Jesus. And now they're making like mini spreads. It went from big spread to little spread. And that means that there's no excess demand for gasoline.
Well, I think that's just great. Well, there you go. Well, listen, we're going to close it out right there, guys. So really want to thank you, Janet, for joining us today. And everyone, you can follow Janet Alvarez, follow her on Twitter, watch or listen to her on SiriusXM. She is the host of the Business Briefing on Channel 132, and she's also the chief of the Dallas Express. So listen, Janet, thank you again.
Todd, I'd like to personally say it's tragic that they don't have video on Sirius because among being extremely bright, it's pretty easy on the eyes, Todd. I'm just...
Oh my God, okay. All right.
So much for having
us. Thank you so much for joining us. We hope to have you back.
Cheers.
All right, thanks again for joining us on Buy, Hold, Sell. We'll catch you next time. Take care.
Bye.
All right, that was great.
I want you to smash that like button.